Hello, welcome to this video. And in this video, I'll be explaining to you how you can make use of the RSI indicator to enhance your trading strategy. And this is one of the best indicator trading strategy that I'll employ you to keep and use from time to time. Why? Because this strategy is a strategy that I will be explaining how you can use this to surface or to support your price action. So if you're a price action trader, you could actually make use of this to help you to get more assurance to placing entries in the market. So if you're new to this channel, I'd like you to click the subscribe button and also click the bell button so you get notifications whenever we upload new videos like this. The best way you can support us is by subscribing to this channel so that we can continue to give out quality content to everyone. So quickly going into this particular strategy. So what does this strategy entail? It's a strategy that makes use of the RSI, which means the relative strength index indicator. Yeah, that's the RSI. It's an oscillator. So a strategy that makes use of the RSI indicator to spot relevant zones, relevant levels, to filter it out and to make it to give you more confirmations before you actually invest your money in a particular trade setup. So we'll be jumping right into the screen so that we can see how it all entails. So now quickly, um what I want you to understand first of all is if you know try to understand the strategy properly, it's a strategy that can give you $50 to $100 per trade. So it's necessary that you stick to the end of this video so that you can understand the steps that I'll be explaining on how you can actually make use of the strategy to be profitable. So the first thing you want to do is you want to understand your support and resistance levels. And I have a particular software, or I would say indicator, that I use for plotting the support and resistance level. So if you are having issues differentiating major and minor support and resistance levels, then you don't have to worry no more, because I'll be giving you this particular indicator for free. All you need to do is just to go to the description below and you will see a link that will direct you to a link that says download my indicators. So there's a list of indicators that I use, so just click on the link and all you'll be looking out for in the list of indicators right there is the spread. You can see this supply and demand. So download it, add it to your charts, and jump right back into the tutorial, the lesson. Yes, now the first thing is, once you spot this out, you want to be filtering them using your relative strength index. And first things first is you want to make sure that you're doing this on a higher time frame. When I mean higher time frame, I'm talking about time frames that are from 4 hour to daily to weekly to monthly. Anything lesser than the 4 hour time frame has a lot of noise and can't be reliable. I will emphasize that they can't be they are not reliable, they are not dependable, because the noise in the markets are quite much. So what you need is a higher time frame to spot support and resistance that are reliable. And this particular indicator, what it does for you is it plots only support and resistance levels that have been tested. Yes. So now, if for instance you can see here verified resistance, retest retested twice. It is a verified support retested thrice. So, you know, if the support and resistance have been touched about more than once, it sees it as a relevant support and resistance, a major one, which is the main essence of why or of how we spot major support and resistance. The number of retests, then how current is the support and resistance. That is a resistance or support that has not been broken. So, and if it has been broken, has it been retested? Yes. So those are the criteria we use to spot strong and relevant support and resistance levels. So you don't need to worry yourself about all that headache. This indicator does that for you. So the next thing you want to be doing, do not forget that we are on the 4 hour time frame, which is your higher time frame. If you're a busy person, you also can go as far as using your daily time frame. The more or the bigger the time frame, the more reliable the support and resistance. Note that the bigger the time frame, the more reliable the support and the resistance. So the next thing you want to do is to check out your RSI overbought and oversold level. So in this particular scenario, I would like to work with this particular instance, which is this level right here. You can see that your RSI, you can see that the level this corresponds on your RSI is above 70. Now between 70 and 100 is your overbought, and between 0 and 30 is your oversold. So for confirming resistance levels, you want to make sure that your RSI has pushed to the overbought region. Then for confirming your support levels, you want to make sure that your RSI has pushed to the oversold level. So having got those confirmations, like this particular level we have right here, that's why I drew this line to check to mark it out. So after confirming that on this on this particular support we have an overbought, sorry, on this resistance we have an overbought, the next thing you want to do is to go to a smaller time frame. Yes. Now, let me just quickly explain this. You will notice that even though there were several retests of this particular resistance level right here, you can see that none of them actually touched the overbought region except here. So that means this particular resistance level did not become a major level until after it was retested here. Right here it wasn't a major one, right here it wasn't a major one, but the moment it touched it here, it now became a major level. So that is how you could actually spot or filter out major support and resistance levels. So the next thing you want to do is to go to your smaller time frame. Take for instance your 1 hour, and once you move to a smaller time frame, the next thing you want to be looking out for is number 4, which is divergence. Yes, and you know divergence is a disparity, that is a disparity between your price, or your price is doing, and what your indicator is doing. Your price could be going up and your indicator could be going down. So when you have a non-conformity with these two elements, then you have a divergence. So in this scenario, you can see this went up from here to here, and you can see it also went down on my RSI from here to here. So if you're unable to spot these levels properly, what you need to do is first of all you can draw a line to to link the particular level on the chart on price to the oscillator, like this. So after doing that, then you can now join them together using your lines. So having done that, the next thing you want to do is you want to check for a breakout. Now, before I go to the breakout, there's a particular video on the channel. If you don't understand basically what divergence is, so you can go over there and just watch it extensively, so you can have a good knowledge of what divergence means and is. And but in a nutshell, we have just two types. You have the regular and the hidden divergence, and the regular one tells you that the market is reversing, while the vice versa for the hidden is showing you that the market is continuing in the particular trend. So now, after spotting this resistance, sorry, divergence right here, the next thing you're looking out for is our breakout. So I can draw, there are different ways of drawing our breakout. You can draw the breakout on the price chart itself, and we could draw it on the RSI also itself. You can actually understand this properly by going to watch the video I created on understanding how to use the RSI. It's very extensive and you're going to love it because it's a no-brainer. So this is just a strategy that I'm putting together to help you to make at least $50 to $100 on a daily basis. So now, the first you want to look out for before you know draw your trend line to spot a breakout for your entry is this. This is the level that we are presently. Yes, assuming this is the present level we are presently, you want to look for the beginning of this trend, this uptrend, before hitting this resistance here. We usually call it the previous swing low. Yes, the previous swing low, which is right here. This is the previous swing low. So you want to draw the corresponding level here. Okay, these are the corresponding levels right here. Swing low, you can see it formed the double bottom right here. So this way, this way. So the next thing you want to do is draw your trend line to join this corresponding level and this level. Yes, so you draw it this way. You can see this level right here, this level right here. So you draw it to join them together. So where your RSI now crosses or breaks out from this trend line, the next thing you want to do is draw a line to where it broke out, which is here, just right here, and that is where you place your entry. So your entry is just going to be right after the end of the candle, which is here. So you ride your wave from here, you ride your wave to the previous swing low, which is here, and that's how you make your profit in the market. So it's a very easy strategy. All you need to do is just to kindly back test it, look at how you could actually use it for profitability. You can use it for profitability. So let's just look at this scenario. You can see something like this. You can see a divergence right here. You can see a divergence just right here. Then the next thing, you want to look for the previous swing low, which was here. You can see swing lows. So you want to draw your trend line to cross this level. You can see. So you can see that you can see just right here, it crossed the trend line just here. Cross the trend line just here, then had a bit of a consolidation before dropping further. So this was where you could have placed your entry, and this is where you would have placed your target. So from here to here would have been your profit. So this is how you could actually make use of the RSI using support and resistance to make confirmations, and also use the breakout strategy and divergence strategy to win most of the time. So if you love this strategy, I'd like you to drop your comments in the comment section below, and also please, if you have any question or anything you want me to address or treat or explain further, please also drop it in the comment section below. And do not forget to like and share this video with your friends. And if you're new to this channel, endeavor to also please subscribe and click the bell button so you get notifications whenever videos like this are being created and uploaded. So I remain your boy Lekki Cosby Finance, and I'm going to see you in the next video. Take care and be good.